Question 476. To establish an agency relationship between a principal and broker, the most important component is the A. Offer, B. Property description, C. Commission agreement, D. Written employment contract. Correct answer is D. Written employment contract. In many jurisdictions, including California, the statute of frauds requires agreements authorizing an agent to sell real estate for a commission to be in writing to be legally enforceable. This means that an oral agreement to pay a broker a commission for selling property is generally not legally binding. A written contract clearly outlines the scope of the broker's duties, the specific property involved, the terms of the commission, the duration of the agency, and other essential aspects of the relationship. This minimizes misunderstandings and potential disputes between the principal and the broker. Without a written agreement that complies with the statute of frauds, a broker may not be able to legally claim a commission, even if they successfully procure a buyer for the seller. The initial offer and acceptance are the foundational elements of any agency relationship. But the written employment contract is the crucial component for establishing a legally enforceable principal-broker relationship in real estate, particularly concerning the broker's right to compensation. Question 477. An arrangement that allows a mortgagor to borrow additional sums in the future up to a maximum amount, secured by the mortgaged property, is called an A. Assumed loan, B. Advance costs, C. Open-end mortgage, D. Secured future mortgage. Correct answer is C. Open-end mortgage. Assumed loan occurs when a buyer takes over the existing mortgage of the seller. It doesn't involve borrowing additional funds in the future by the original mortgagor. Advance costs are expenses paid up front when obtaining a mortgage, such as appraisal fees or credit report fees. They don't relate to future borrowing. While secured future mortgage accurately describes the concept of borrowing more against an already mortgaged property, the industry standard and widely recognized term for this financial arrangement is an open-end mortgage. Open-end mortgage allows the borrower to reborrow principal that has been repaid, up to a certain credit limit. It's similar to a line of credit secured by the property. As the borrower pays down the principal, that amount becomes available again for future borrowing without having to refinance the entire loan. Home equity lines of credit, HELOCs, are a common example of an open-end mortgage. It allows for reborrowing whenever required, without negotiating a new mortgage. The interest rate applied is the usual market interest rate, which rises and falls based on market conditions. Question 478. May place a limitation, called a restriction, on the use of a property. A. A private owner, B. A developer, C. The government, D. All of the above. Correct answer is D. All of the above. Restrictions are generally placed on property to make sure that land use is uniform and stable within a particular area. When selling or transferring property, a private owner can place restrictions on its future use through deed restrictions or covenants, conditions, and restrictions, CC&Rs. Developers often create and record CC&Rs for entire subdivisions or plant communities to maintain property values and standards within the development. These restrictions govern how owners can use their land. Federal, state, and local governments can place limitations on property use through zoning ordinances, environmental regulations, building codes, and historic preservation laws. Therefore, private owners, developers, and the government all have the authority to place restrictions on the use of a property. CC&Rs are a legally binding set of rules and regulations that govern how homeowners can use, maintain, and improve their properties. These rules are typically created by the developer of the community and are recorded with the county. When you purchase a property subject to CC&Rs, you automatically agree to abide by them. CC&Rs aim to maintain property values, ensure a certain level of aesthetic consistency, and promote a harmonious living environment within the community. They can cover a wide range of aspects, such as architectural standards, landscaping requirements, restrictions on pets, parking regulations, and the use of common areas. Question 479. Conveying an interest in real property through the terms of a lease is called a term interest, b. tenancy transfer, c. lease, d. severalty. Correct answer is c. lease. A lease is a contractual agreement by which one party, the landlord or lessor, conveys possession and use of real property to another party, the tenant or lessee, for a specified period and for a specified consideration, rent. This conveyance creates a leasehold interest in the property for the tenant. While a lease creates an interest for a specific term, term interest is not the standard legal term for the act of conveying that interest. Tenancy transfer generally refers to the assignment or subletting of a tenant's existing leasehold interest to another party, not the initial conveyance from the landlord. Severalty refers to sole ownership of real property by one individual or entity. It's the opposite of shared ownership and doesn't relate to conveying an interest through a lease. Question 480. John is opening a new restaurant in a shopping mall, with no certainty about how much income it will generate in its first year. The type of lease offered by his landlord has the tenant paying a percentage of the gross monthly income added to a basic rent amount, called the A. net lease, B. percentage lease, C. graduated lease, D. ground lease. Correct answer is B. percentage lease. In a net lease, the tenant pays a base rent plus some or all of the property's operating expenses, such as property taxes, insurance, and maintenance. A graduated lease has rent payments that increase at predetermined intervals over the lease term. A ground lease is a long-term lease of land, where the tenant typically builds their own structure on the leased land. Percentage lease is type of lease common for retail businesses, especially in locations like shopping malls where the landlord wants to share in the tenant's success. The rent is structured with a fixed base amount plus a percentage of the tenant's gross sales or income. Question 481. The purchase of a single-family residence can result in the following income tax deductions, except A. painting the house, B. loan points, C. loan interest payments, D. property taxes. Correct answer is A. painting the house. Loan points are fees paid directly to the lender at closing in exchange for a reduced interest rate. They can usually be deducted in the year they are paid, for the purchase of a primary residence. Homeowners can typically deduct the interest paid on their mortgage, up to certain loan limits. The real estate taxes paid to state and local governments are generally deductible, subject to certain limitations. Therefore, the exception is painting the house. Question 482. As a real estate term, setback refers to the A. loss of a commission to a broker when a real estate transaction fails to close, B. distance from a curb, property line, or structure within which building is prohibited, C. distance between the front of a property and the street, D. none of the above. Correct answer is B. distance from a curb, property line, or structure within which building is prohibited. Loss of a commission is referred to as a failed closing, not a setback. While the distance between the front of a property and the street is indeed a type of setback, the term setback is broader. It refers to the legally required minimum distance between any structure and all property lines, including front, side, and rear boundaries, not solely the distance from the street. Therefore, a front yard is a specific example of a setback. In real estate and land use, a setback is the legally required minimum distance that a building or structure must be separated from property lines, streets, or other structures. These regulations are typically established by local zoning ordinances to ensure adequate light, air, open space, and safety. Setbacks can apply to the front, side, and rear of a property. Question 483. Which of the following is not necessary to create a binding contract? A. Offer. B. Acceptance. C. Recording. D. Consideration. Correct answer is C. Recording. To create a binding contract, the following elements are generally necessary. A. Offer. A clear and definite proposal made by one party, the offerer, to another, the offeree. B. Acceptance. Unequivocal agreement to the terms of the offer by the offeree. This acceptance must be communicated to the offerer. D. Consideration. Something of value exchanged between the parties. This can be a promise, an act, or forbearance, and it must be legally sufficient and bargained for. 4. Legal capacity. The parties entering into the contract must have the legal capacity to do so, e.g., they must be of legal age, of sound mind, and not under duress. 5. Legal purpose. The object and purpose of the contract must be legal and not against public policy. Therefore, offer, acceptance, and consideration are fundamental requirements for the formation of a binding contract. Legal capacity and legal purpose are also essential for the contract to be valid and enforceable. Recording is the act of publicly registering a document, such as a deed or mortgage, with the county recorder's office. Recording provides public notice and establishes priority but isn't required for a contract to be legally binding between the involved parties. An unrecorded valid contract is still enforceable between the buyer and seller. Recording primarily serves to protect the interests of the parties against claims from third parties. Question 484. Paul and Arthur want to open a music store. Their friend Bob promises that if Paul and Arthur start a store, he will sell them all of the guitars they need for $50 per instrument for their first year in business. However, when they open the store 3 years later, Bob says higher demand has necessarily increased his price to $100 a guitar. If Paul and Arthur sue Bob for breach of contract, they will likely A. Win, because they cannot procure guitars anywhere else for $50 apiece. B. Lose, because such a low price for a guitar is unreasonable. C. Win, because the condition that Bob based his promise on was satisfied. D. Lose, since 3 years have elapsed since Bob made his promise. Correct answer is C. Win, because the condition that Bob based his promise on was satisfied. A condition precedent is a condition that must be met before the performing party has a duty to perform. Once the condition is met, performance is required. Here, the condition precedent for Bob's promise was for Paul and Arthur to open a music store. Once they did that, Bob's duty to sell them guitars at the price he originally quoted was triggered, and he is contractually bound to do so. Question 485. Cammie the owner sells her home to Fred the buyer for $300,000 while agreeing to finance a loan for Fred. This transaction is known as a unconventional loan, B. reverse mortgage, C. land contract, D. HARP loan. Correct answer is C. land contract. While owner financing might deviate from typical institutional lending, unconventional loan isn't a specific legal term for this type of transaction. It's a broad term that could encompass various non-standard financing methods. A reverse mortgage is specifically designed for homeowners aged 62 and older to access their home equity without making loan payments. It's not applicable to a sale between a buyer and seller where the seller finances the purchase. The Home Affordable Refinance Program, HARP, was a federal program that helped homeowners refinance their mortgages into more affordable options. HARP was intended for borrowers who might not otherwise qualify for refinancing due to factors like declining home values or limited access to mortgage insurance. Borrowers with little or no equity in their homes, or who were underwater, on their loans, were encouraged to apply. HARP allowed borrowers to make changes to their mortgages, such as lowering interest rates, shortening loan terms, and changing from an adjustable rate mortgage to a fixed rate mortgage. In a land contract, also known as a contract for deed, land installment contract, or an installment sale agreement, the seller provides financing for the buyer to purchase the property, which the buyer repays in installments. Under this kind of contract, the seller, Cami, acts as the lender and retains legal title to the property until the buyer, Fred, has made all the payments according to the agreed upon terms. Fred takes possession of the property and makes payments to Cami over time. Only after the final payment is made does Cami transfer the legal title to Fred.